gone via the QIP route. So they are looking to raise 125 crore. That's on transformers and rectifiers. But Gagan Banga, the Vice Chairman and MD of Indiabulls Housing Finance, also joins us on the show now. Mr. Banga, first, if you could just give us the net interest income growth. What was it this time around? As well as your margins and spreads.
So the net interest income has increased by 28.2%. That's on the back of an approximate 30% increase in our loan book. The balance sheet has now gone up to 82,000 crores. The loan book stands at about 71,000 crores, which is a 31% increase, and the net interest income is up by 28%. The profit is up by a little over 23% to 630 crores. The margins have been very stable at about 318 basis points. We have been doing a calibration between increasing focus on home loans as our cost of funds reduces. So we've been able to do that quite successfully over the last 4 to 6 quarters, keeping our margins same, but we've been able to increase our focus on the home loans. And we've also used the last 6 to 8 months to work on developing a new product, which is a home loan which can be completely done over the mobile phone or the internet. So that should allow us to increase our emphasis on the home loan offering and over a period of time also increase our market share in that space.
Right. Could you also tell us what was the disbursement growth in this quarter, and at the same time what your loan book breakup is, because you did say that you have focused on home loan books. So if you could break up your loan book in terms of housing, LAP as well as builder loans.
Yeah, so we have been directionally moving towards taking home loans by 2020 to about 65%. That directional move started from home loans being 50% in the middle of last year. As we speak, they stand at about 53%, and directionally over the next 3.5 years, they will get to about 65%. Our disbursements are at about 6,500 crores, which is also an increase of approximately 30%. And our repayment and prepayment rates have actually now stabilized over the last 2 to 3 quarters at about 1.4% per month, which is in line with some of the other leading industry players. So we will have to grow our disbursement broadly to just offset whatever repayments and prepayments are happening, and the overall book growth target, which is in the ballpark of 25%.
Right.
Your asset quality has been fairly stable. Gross NPAs at 0.84 unchanged, net NPAs at 0.36. Anything in the asset quality that you'd like to highlight that, where you do see any sort of a concern, or it should be stable as we've seen so far?
No, the recent financial stability report of the RBI has just sort of underlined the great credit performance that the entire mortgage sector has displayed. Within that, there is also a stark performance difference between housing finance companies, private banks, public sector banks, etc. So if you will notice that gross NPAs of most leading housing finance companies are in the range of 80 to 100 basis points. We are at about 84, 85 basis points. We have been holding this number steady now for almost 5 years, and we are reasonably confident that our guided range of gross NPLs will remain between 70 and 90 basis points, and net NPLs will remain in the range of 30 to 50 basis points as we've guided till at least 2020.
All right, and before we let you go, Gagan, if you could tell us what kind of growth do you expect in your core mortgage book, because we did have the management of LIC Housing Finance recently, and they indicated that there could be some pressures there. So they envisage a growth of almost about 9-odd%. So we'd just like your commentary on that.
So the sector is growing at 18%. We've been growing broadly at about 25 to 30%. There have been a lot of very positive industry moves which have happened at the start of the year. Service tax has been removed, corporate tax for affordable housing developments has been removed. There has been a very big move in terms of increasing the tax rebate for people who are borrowing for their first home, as well as there has been a lot of liquidity which has been put into the system through the removal of the taxes around securitization transactions. All of these 4 steps and the real estate regulation bill put together should possibly accelerate the industry growth from 18% to the range of 20 to 22%. And in that backdrop, we are very confident that we should be able to grow by between 25 and 30% the core home loan book.
Okay, Gagan, we leave it at that. Congratulations once again on a good quarter. Indiabulls Housing Finance is now up close to about 3.5%, a 30% plus loan book growth seen in Q1, maintaining spreads at 3.18%. And they're also guiding for a 25% loan book growth, and asset quality till 2020 will be within 0.9% on the gross NPAs. He gave a range, I think, of 70 to 90 bips on the gross NPAs, while on the net NPAs, he had given a guidance of 30 to 50 bips. And this is a 2020 guidance. So they're expecting asset quality to be maintained stable for the next many years. With that, it's a wrap on Midcap Radar. Your stocks when we return.